Hey, Chase here with Own Boise, and I am excited because today we have the market dynamics through the end of 2022 for Ada County or the Boise area. And we are going to be looking at two things. So I know this video is way too long. You won't watch the whole thing. So there's only two things you need to know that are in this video. So the first one is we're going to be looking at what happened in our market in 2022. Secondly, we're going to be looking at why did that happen. And then lastly, we're going to be looking at what will happen in 2023 and why do I think that will take place. So if you're interested in that, watch the rest of this video. All right, so let's just do a fast year-end review. Let's take a look at what happened, and then we'll talk about why it happened for 2022, and let's put that year to bed. So first things first, we started off with super low inventory. As you can see over here in this red line, we were in the 200 to 300 inventory range for resale. And on new construction, we were in the 200 to 300 range for new construction as well. So we had roughly 500 to 600 homes on the market in the beginning of the year. We have over 600,000 people just in the Ada County area alone. So that is a very, 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 very small amount of homes on the market. So it's no surprise that we saw our pricing actually go up when it comes to pricing. So, too little supply, too much demand, prices go up. Definition of inflation. That's exactly what took place. So, well, speaking of inflation was taking place as well. We saw some record inflation. So the Federal Reserve stepped in, stopped buying bonds and mortgage-backed securities, and they also have started raising interest rates. The secured overnight funding rate, which is basically the rate at which banks can borrow money. So when the banks are paying more to borrow money, that means you and I are paying more to borrow money. So what happened there? Well, we saw inventory go up pretty significantly because rates went up pretty significantly. In fact, I'm going to show you a brief look at rates. We started the year in the low threes. We peaked at 7.25%. In fact, going back to June, we were roughly 6% in June. And then, of course, we peaked at 7.25. We've actually seen rates come down. As of today, as I'm filming this, it's January 16th, and rates are at 5.75. So we're actually about 1.5% lower than where we were at the peak in November. So when those rates went up, so did our inventory, and our sales actually came down. So that's another year in review. In fact, December closings and pendings versus December of 2021's closing and pendings, we are down about 45% year over year. So no surprise because rates in December 2021 were 3%, and they were, in the 6.5 range for 2022. So that's pretty much the sum up of what's happened, right? Now you might be asking, well, why is the Fed raising interest rates? Now, some of you probably already know this, but for those of you that don't, it's all about inflation, because inflation is it's a hidden tax, right? When our dollar value goes down, basically we're being taxed, if you will. It's the number one hidden tax that we honestly don't really talk about normally, but it's been in the headlines everywhere for the last 12 months. We actually peaked somewhere in the 9% range. Well, the last numbers for January, that you can see this pop up right there, making sure you can see that okay. It says on here, if you can't see it, that 5.7% was the core CPI, the Consumer Price Index. That's how much everything, all the cost of goods, excluding energy, which is volatile, and food, which is volatile, but you still have to pay for, I get it. But excluding those two things, the core inflation was 5.7%. Well, that's actually good because it was all the way in the 9.3% range back in June or July of last year. So the good news is them raising those rates, making money more expensive, making less money into the supply of money, has caused the cost of goods to come down a little bit or stop raising as much as they were. What they're doing is working. Now the challenge is, do they keep their pedal to the metal and keep on hammering rates up so we can get inflation down? Well, the challenge with that is obviously you don't want to shut the economy down completely. So no one knows exactly what the Fed's going to do. So we've reviewed 2022. Prices actually ended up, 6% for the year 2022. Our average sold price is 609,000. The year prior was 575, so we were 6% higher. So that pretty much rounds out the entire year 2022. So here's what I think is going to happen in 2023. And then I'll talk about a couple scenarios. If you're a buyer, what you should be considering, and if you're a seller, what you should be considering. So in 2023, here's my prediction. I think we do see prices continue to come down. We'll probably see another 5 to 10% down this year before we kind of bottom out. And I do think we also are really looking at a bottom this year. Now that's going to be dependent upon the Fed deciding that they no longer want to raise rates. And actually, I think we bottom when the Fed decides they're going to lower rates, which a lot of experts think will happen this year. And I tend to believe that as well. So I think we come down 5 to 10% in the first 6 months of this year. And that's why the Fed is still messing with rates and continuing to raise them. The raises will be less, if at all. I think we have one more raise, maybe 25 basis points, maybe 2 raises at 25 basis points, and then I think they stop because we've had the fastest rate hikes in the history of the Federal Reserve. And I think they're going to pause and say, hey, this is a different economy, right, than it was back in the 80s, the Volcker days for you rate nerds out there who want to talk about that. It's a different economy today than it was back then. Let's see what these rate hikes do to our economy. How much are we slowing it down? Is there way more slowdowns than we even know about? We don't want to crash the economy, so I think they're going to pause. And then I think as they see these rate hikes really, really bring our economy to a real slow, I guess almost to a stop, that's when I think, and a lot of experts think, not me, I'm not an expert, but based on everything I've read and heard and studied, that's when I think the Fed actually starts to lower rates. And that's going to either happen, it looks to be happening at the end of this year or the beginning of next year, depending on the experts you talk to and listen to. I'm curious what you think. When do you think the Fed will stop raising rates? And secondly, do you think they'll lower rates, and by when if they do? I mean, there's probably no question they will lower rates. It's just, is it going to be in 6 months or a year or 10 years? I have no idea. No one knows, right? The Fed is going to make that decision, but they're basing it on all the data that they see. So I think prices come down. Okay, so that's not a bad thing if you're a buyer, right? And I do think that we actually see a bottom out. Now, I think this bottom, if you will, it's not going to be like a spring where we bounce and you got to be like, I'm timing the bottom. You don't have to do that. I don't think there's any issue with that at all. In fact, I think it's going to be a slow crawl back out, probably like a 12 to 18 month process before we see prices moving at any sort of pace that you would really be concerned about. So that's the good news, is that, if we do bottom this year, I don't think we're going to bottom and be like, you missed it, right? I think you're going to have the opportunity to, be able to make a move for you and your family and, make the best decision for yourself. So if you're a buyer, what should you do? Well, I just told you prices are going to come down, so should you wait? I don't have the answer to that because everyone's situation is different. Here's my best answer for that situation. When's the best time to buy? Can you afford it? Do you have a good enough reason? If the answer to both of those is yes, I've got a great reason and I can afford it, then just buy with confidence, okay? Because even though you might be able to get the price a little bit lower, if someone else buys that home that you want, you might never be able to buy it again because they might own it forever. And I have plenty of stories in the last 17 years where people have made offers on a home they missed out on time and time again, and they still can't buy it. So I don't know the answer for your scenario, but if you can afford it and you have a good enough reason, then you just got to buy with confidence. Now, if you have no compelling interest to buy right now, but you want to buy sometime soon, then I'd probably watch. I'd probably watch rates, and I'd probably be watching pricing. And I do think pricing is going to get a little bit more aggressive here over the next 6 months. So if you're a seller, you're thinking, should I sell my house? When should I sell my house? Well, let's go look at the inventory here. Let's zoom in here real quick. 726 homes. This is the lowest inventory we've had since May of last year. And I do think this is probably the bottom in terms of inventory. So If you had to sell something, do you want to sell it when you're competing with a lot of people or less people? And oh, by the way, if prices continue to come down, do you want to wait until your home's worth less? Or do you want to go ahead and take advantage of the market today before it continues to go down? Now, no one has a crystal ball, and I'm not saying I do either. I mean, it's very possible that I'm wrong. But based on the data I see and the information I have, I do think we're going to see prices get more aggressive, because you're going to have sellers who've been trying to sell and haven't really needed to sell. But some of those people are going to stop trying, and they're going to say, get this thing sold, price it right. And these are conversations we're having with our clients on a daily basis. Like, you got to be priced right in this market. Waiting for an offer or trying high and then lowering down, I think that's a big, big, big mistake. If you really need to sell, you need to get it priced right to begin with. And you're entering a competition when you list your home. And so if if it was up to me, I'd want you to be the best priced home and the best value. It doesn't mean you want to give it away, but we want to make sure that we have the best opportunity for you to get the amount of money you need in the time frame you need and get to whatever it is the goal that you're trying to accomplish. But sitting on the market, 20, 30 grand overpriced, it doesn't help you. It doesn't help us. It doesn't help buyers. It helps no one. And if you were a buyer out there, I always ask my sellers to do this, consider yourself a buyer. Now, would you buy this home that's clearly 20 or 30 grand overpriced? And of course they say no. But for whatever reason, when it comes to their home, we put in new carpet, or we, put the playground in, or whatever. And the reality is, while that playground's been great value to you, it's not necessarily worth 20 or 30 grand more to the next buyer. So get your home priced right now more than ever. Because if you start your home here, but the market's here, and let's just say the market's moving downward, by the time you come down to the price where the market's at, it's already moved down below. And you just play this game where you keep going down, and I don't want you to miss that window. So recap of 2022, even though rates went up significantly and inventory went up significantly, we still saw a price increase overall. So if you owned a home in 2021 and did nothing, your home actually went up in value. Now, that can be debatable depending on which area. So if you want to find out your exact value, we'd love to help you out with that. Feel free to reach out to your favorite owned Boise agent. You can go to our website, click a button, and we can give you an automated value. It's not super accurate, but we can dig into that as well. Now, 2023, what do I think is going to happen? We're going to see prices continue to depress here. We're probably going to see another 6 months, if not more, of prices coming down as sellers need to sell and get more aggressive with their pricing. And then I do think rates are going to calm down. I think we'll see rates probably, I didn't give you a range of rates, but I think we're going to see rates in that 5 to 7% range for the 30-year fixed. And it's probably going to be there for the next 12 months. So as of today, as I'm filming this, January 16th, rates are at 5 3/4. That's not a bad rate. I mean, I think you're on the lower end of where the average is going to be for this year. So if you're looking to take advantage of rates, now's not a bad time. Now, of course, in 2 years or 3 years, if rates come down significantly, like a lot of experts think they will, you can potentially refinance and get a better rate. So that's it for this episode. Thank you guys so much for tuning in and watching the whole thing. As always, if you have questions on real estate, want to know what your home's worth, want to know if you can qualify for a home with zero money down, you want to know how to invest in real estate, taking advantage of prices while they're down, reach out to us at Own Boise. We'd love to help you with your goals. And thank you so much for watching. Have a great day.